This is NIO. A trader named No Filter asked me about my thoughts for March 5th, which is when the car company reports earnings. And right now, the estimate is at $2.558 billion. Now, first, I'm going to break down the price targets for Monday. And then on Monday, I will do the same thing for Tuesday. That'll be much more accurate for Tuesday. Now, we are basically at the middle of the trend. And from where we are, this is support. Resistance takes us to 599, 612, and 625. To the south side, a gap developed this week. I track NIO for my gap and go trades, so I will do that again on this video. I'm going to go just a little bit deeper into this stock. We have a gap that takes us to $545, and this is also at resistance. This now lines up. So if we hit this target area, I will anticipate a bounce here, here, and here. At -2 standard deviations, we are looking at 549, another level of support, 536, and 524. We have a gap to the south side that will take us down to 470, and I think that is the last gap I'm tracking. So you'll definitely want to take a look at this on the daily, the weekly, and the monthly, and look for other gaps to either the north side or to the south side to get an idea of where we could be headed. But right now we are in an upward channel on the 5-minute time frame. And when it comes to earnings, the company has reported earnings 21 times. 10 of those times, it's been in the green at 47%. And 11 times they've reported, they've been in the red at 11 times, which represents a 52%. Well, a 52% in a grade level, right there, is an F. And a 46% grade level, or 47%, is still an F. I would keep my expectations low, because if you've been in NIO for as long as I've been in NIO, you know this stock has tanked. And finally, we could be hitting the bottom. The bottom for right now at the 52-week low is $5.30. The 52-week high is $16.80. Well, it was much higher. It has been much higher than that. If you go to the monthly, you'll see that. But the days range 568 and 584. But again, note how low we are for the 52-week range. But we are in an upward channel, so that is nice. On the daily, the RSI is turning up with plenty of room to go to the upside. For the weekly, turning up as well. No longer oversold, as you can see, and never oversold on the monthly. And how many times were we oversold on the daily? Yeah, many, many times. But on the daily, look at this. You know, intuitively, when we get to this level, there's going to be a crash. And sure enough, back down here, back down to support. Resistance, support. And then trying to make our way back up to resistance. And what happens at resistance? Things fall down. This is a natural cycle here that I see. So we are on our way up, and we've already hit the bottom again. So I do anticipate on the daily to creep back up this way eventually, and then flush down again for the cycle to repeat itself. But with this stock, if you keep your expectations low and you've bought in at this level, long term, I think you're going to see some profit. The 1-year price target is $9.78, which represents a 69% return from where we are. Of course, if you bought it in the $20 range or the $16 range, you're underwater. So you may be trying to claw back. And that's what I'm doing, clawing back. Back to the 5-minute. Oh, excuse me. See, on the 15, since I'm here, we are going down. RSI turning down. So it depends on what time level that you are playing that you're going to see, obviously, different targets. And I'll see. I need to flip this over. But if we do make our earnings and revenue projections, just because we meet them doesn't mean it's going to run. As you know, price can still flush you out. It can tank. And that happens so many times. You think, oh, we've got great earnings. Well, guess what? People are taking their profits and they're running. Or they've hit a target and they're getting out. But looking at this, we have this gap. The RSI is still turning down and we have not turned around to curve back up. So this gap is in that -2 range where I anticipate price to go all day long. So I think this gap could still close and then make its way up. But again, I will go over this stock on Tuesday to see where we head, because Tuesday morning, I can then give you a better range. But I keep my expectations low for this stock, and if it fills for the gaps to the upside and the downside within -2 and 2, then I'm comfortable playing this. And this is definitely a long-term stock. EVs have taken a beating. The economy is still in the toilet. Interest rates are still high. Are they selling more cars? That remains to be seen. But I did see on Simply Wall Street here, NIO is forecast to grow earnings and revenue by 57.8% and 22.3% per annum, respectively. EPS is expected to grow by 60.7% per annum. Return on equity is forecast to be 4.6% in 3 years. And this is on NASDAQ.com. NIO has a high earnings quality ranking, EQR, for the 13th consecutive week. Earnings quality refers to the extent to which current earnings predict future earnings. High quality earnings are expected to persist, while low quality earnings do not. EQR is a weekly ranking of relative earnings quality for a large universe of publicly traded U.S. equities. And I saw another report that the company was selling more cars, but now I don't know where that is. But I would just go in with low expectations and don't expect this thing to make huge movements. This thing is not going to go to the moon. You just have to trade it day by day and then flip it over to the 1-minute time frame if you're trying to make daily income. So look at that. On the 1 minute, you're going down. On the 1 hour, ignore all of these vertical lines. I track this once again for my gap and goes, which I will make a video very soon for the end of this week's gap and go trades. But look at this. On the daily, on the 1 hour, we're still going down. On the daily, still going down. So keep your expectations low, and if it does something great, fantastic. And those are my thoughts for NIO. And if there is a stock that you would like me to go over, please let me know, and look out for my gap recap for the week of, what was that? February 21 through March 1.